Hello, good morning and welcome to Buy Now, Sell Now. You're watching ET Now. I'm Varun Hiremat and along with me is Cheryl D'Souza. She should be with us just shortly if she's not already. But let's take a look at the market and whether we have firecrackers this Diwali season or not. The market is definitely giving us all the firecrackers we need. Nifty, Sensex all touching lifetime highs today. The SGX was giving us that indication in the morning. We're at an all-time high for our indexes, so a day to be proud for all market investors. We're now happy with the U.S. election outcome, and it seems that particularly financials and pharma as sectors are ready to lead the charge upwards. Look at DIVIS Labs today, up 6%, and all your banks are doing well. Talking about what's leading the index higher, we also have RIL and Aramco in focus. Nayantara just broke a story. It seems that the deal is very much on, and it had taken a pause due to COVID, and now that COVID's behind us and also possibly the U.S. election outcome, maybe some outlook on oil prices is now visible. It seems that the deal is once again having a lot of traction, and we might hear something from them soon. It's a massive deal and it'll mark one of the largest oil investments in Indian history. So keep your eyes out on RIL. It's currently up 1%, and it's regained a lot since it lost last week. We then have a strong Q2 for ITC. EBITA hits an all-time high for them. The FMCG business is leading the show, so taking the limelight away from tobacco. Keep your eyes out for that one. We then obviously have a mega IPO. In fact, India's largest pharma IPO, Gland Pharma, which is opening for subscription today. It's 6,000 crore we're talking about. It's a very large company, and the marquee investors should be lining up for this one. We then have Tata Consumer also in focus today, again on the back of strong growth seen across their India business segments. Even their tea business is doing very well. EBITDA was 400 crore versus 315 crore YOY for this quarter. So that stock's in focus and again poised to do very well from here on out. Let's also take you through the BNSN quiz question for this morning, as we've been asking you every day. Today, the question revolves around hotel stocks, and please do tweet to us on the ET Now handle if you'd like to participate. It's which hotel company had the highest EBITDA in Q2 FY21, and your options are obviously Indian Hotels, EIH, Chalet Hotels, and then Lemon Tree. So do tweet to us, and if you get the answer correct at 11:45, we'll be featuring you on our channel.
Is the BNSN quiz for the day, and also yes, even Varun mentioned earlier, our markets have hit record high levels and the Nifty is back to its pre-pandemic levels. So let's revisit some of the major corrections and recoveries in the market during the last 2 decades. Jayesh is here to take us through the corrections as well as the recoveries. Jayesh.
What a year 2020 has been, with the Nifty falling as much as 40% in 45 days to hit its rock bottom at about 7511, only to realize that 157 trading sessions later, it is back to its pre-pandemic level of 12430 that it had hit on 20th of Jan. And that is exactly what the chart will also show you. So how does this fall and recovery in the market compare to previous instances that we've had in the last couple of decades? Let's have a look at those as well. There have been 6 other instances where the Nifty has corrected more than 25%, and it has been a sharp knock and a steady recovery that we have seen in the market. In fact, all of the recoveries in the last couple of decades, if you see, the Nifty has managed to recover in more than 100% of the time that it actually fell, which is more than double the days that we've had, except for few instances like 2006, the 2008 to 10 fall, and the current fall as well. It has taken almost 4 times the amount of days that we took to fall. 45 number of days that the Nifty actually fell this year, and 157 is the number of recovery days. So definitely, on the slower side as far as history goes for the Nifty's recovery of 2020.
All Right, thank you, Jayesh, for that. And now let's move on and let's chat with the management of Gulf Oil Lubricants India. We have Mr. Ravi Chawla, who is the MD of Gulf Oil Lubricants India, joining us on the show. Good morning, Mr. Chawla. Thank you for joining us on ET Now. Let me first begin asking you that how is the demand environment, and do you see it improving going ahead?
Well, we have seen that quarter two has, we have rebounded in terms of growth over last year, quarter two, and we've been able to deliver the highest EBITA and the PBT. And demand conditions are close to normal. Also, lubricants being pent-up demand oriented in terms of being a semi-necessity. All segments have now picked up in quarter two, and we are very happy to see that we have passed the pre-COVID level. And as I mentioned, over quarter two last year also, we have seen close to 7% growth.
All right, Mr. Chawla, let's talk about the base oil prices. How have they actually moved in the quarter, and how have they impacted your margins? Like you said, that you all have recorded the highest EBITDA margins in Q2.
Well, Q2 we had the base oil stocks. Normally we carry 45 days stock. So that Q2 helped us, and we did get the highest margin, as rightly mentioned to you, at 19%. We have seen in the last 2 months that the base oil prices have gone up by $150 plus, and we believe that, of course, whatever increase happens, we will be able to pass it on. And of course, this depends on the movement in the market, but that normally the industry it happens, and most of our B2B business is formula linked. So there has been some increase, and that I guess will be adjusted in prices or promotions and schemes. So I think that has really been the trend, and that's always happened in the industry with its ups and downs on the raw material costing.
Hi, Mr. Chawla. This is Varun also joining in.
Hi,
with mobility improving across the country, hi sir, good morning. Is revenue growth likely to improve going ahead?
Well, Varun, you're right. The use of cars and bikes, of course, we had a lot of agreed uptake in quarter one because of local transportation and also safety angle. We are seeing a lot of demand in the motorcycle, both urban and rural, and cars, as you rightly said. So I think revenues will also depend a bit on the mix, because we would like to sell whichever segment in terms of demand is showing a positive trend. So I think you're right. There will be definitely going into quarter three, we are already seeing those, demands are coming up. And we'll have to take it quarter by quarter. But as I mentioned, demand conditions have become, close to normal. And definitely cars and bikes, personal mobility is playing a big role. Even if you look at the OEM franchisee workshop business, both in diesel engine oil and these two segments have picked up in quarter two. And the trend is continuing in terms of, going above normalcy.
Right, so, on that same note, what's the feedback you're getting from your distributors then? Are they seeing a volume pickup? Are there any particular areas where they're perhaps seeing a rebound?
Well, definitely a rebound. And we have, as I mentioned to you, lubricants is like a semi-necessity, and there has been some pent-up demand. So all channels, distributors, have seen that there is a good pipeline. We have also done some innovative programs in terms of secondary sales and did very well in terms of our secondary sales. So a rebound for sure in this area.
Okay, great, Mr. Chawla. Thank you so much for joining us this morning. Great to get perspective from you. And on that note, I think we'll take a quick break here and buy now, sell now.
While equity is a great asset class to build your wealth in the long term, many investors get confused while deciding which equity mutual fund to choose.
True, and that's why many new investors prefer to invest in an equity index fund.
Yes, because an equity index fund invests in the same companies that the index it's benchmarked to is investing in, and in the same ratio as well.
Equity index funds are also called passive funds because their investments are not managed actively.
Hello, welcome back to Buy Now, Sell Now. You're watching ET Now. Let's take a look at the BNSN stock cloud for this morning. A whole host of different stocks on there, 10 different ones. Now, Tata Consumer, ITC and DIVIS Labs. These three stocks that are on the cloud this morning are all seeing big brokerage upgrades today from Macquarie, from Jefferies. They've all done very well in their most recent numbers, DIVIS Labs particularly and ITC as well, with the FMCG business rebounding. So that's why those three are there. We also have Cipla, which has some brokerage upgrades. We then have Union Bank, Voltas, Eicher, Manappuram on results. Aisha's also given some very good commentary on the way forward just this morning. Union Bank has clarified on results, a very stable set from them, and they are, focusing on credit growth going forward, trying to get 6 to 8% this year. Then we have Ashok Leyland as well on some robust commentary and decent numbers, and Manappuram as well, which is holding up pretty fine. Gold loan segment seems to be holding up pretty well. So that's your cloud for this morning. Over to you, Cheryl.
All right, and let's talk about markets then, Varun. Like we hit record high levels at opening, definitely come off from that level right now, but Nifty is nudging towards the 12,400 mark. The broader markets are underperforming the benchmark indices as of now. If you look at the sectoral indices, almost all the sectors are in the positive territory, apart from Nifty Media Index. You have energy, infra, you have FMCG, they all are gaining in trade today. So let's now get on board our guests for today. We have Kunal Bothra as well as Shahina Muqaddam joining us this morning. Good morning, Kunal, as well as Shahina, and thank you for standing by. Kunal, I'll come first to you. What's your high risk and low risk idea for investors?
So good morning, Cheryl. I'll suggest 2 buy calls even at current market. And I think yes, it's a delight to see the indices back at their all-time highs, specifically Nifty. So I think in that regards, I would focus on a couple of buy calls. The first one is a low risk trade. It's a buy on Eicher Motors. I think after quite some time, you're seeing this stock coming back to some steady momentum last week as well. I think on Thursday and Friday, you had seen some good momentum building up on Eicher Motors. Today, it's a good follow-through price action for the stock. So would suggest a buy with 2260 as the next set of targets, and stop loss could be kept at 2140 levels. And the second would be a buy on Petronet. It's a very interesting chart, Cheryl, because on the daily time frame, it's now on the verge of forming a inverse head and shoulder pattern. There are some other multiple patterns as well, which could be extrapolated on the daily charts. So I would expect some steady momentum to build up on Petronet yet again, and the stock could probably dash back towards above its 200-day moving average as well. So keeping a target of 240, stop loss at 230, would recommend a buy on Petronet as well.
Okay. Hi, Shaina. Good morning. What's on your radar? We need a high risk and then a low risk idea for our viewers.
Well, I would term my first pick Escorts. I wouldn't call it as a high risk. I would say it's more of a momentum stock as of now. Basically, if you see, the government has come up with a number of agricultural reforms, and that is having a lot of positive impact on the rural economy. We have farmers with more income on their hands, and this is going to lead to increased mechanization. And you can already see this reflecting on the numbers that Escorts came out in the second quarter. We had volume that was higher by more than 15% in the tractor segment, and also you had margin expansion because they have been able to control costs. So these things, in terms of valuation, it makes the stock pretty attractive compared to the growth. So I would say this could be one of the growth stocks for the next 1 to 2 years, given the fact that the government is focusing on increasing agri incomes. The second stock I would say is a low risk consign Aerolac. Here the balance sheet is extremely strong, parent is extremely strong. We've seen 2 years of very slow growth, I would say. There was really nothing happening in terms of numbers for the company. But overall, the paint segment has now started picking up. If you saw that, there are two segments, but in their retail segment, in the domestic segment for the consumer, I think the consumer paint segment really picked up very substantially. Volumes also there were double-digit growth, while value was impacted because of the increase in dealer network. I think for the medium to longer term, that will show a very good growth in terms of the overall sales. Industrial segment is still lagging because it will pick up as we see improvement in auto volumes, in consumer durables. But that is a nice kicker that we are likely to see over the coming 2 to 3 years as we see a comeback of these segments. And valuation is not cheap. It is an expensive stock at more than 50 times multiple on the current year. But at the same time, given the strong balance sheet and the parenthood, I would buy this as a portfolio stock, low risk, long term.
Shahina's calls as well. It is Escorts as well as Kansai Nerolac, both of them buy, and including talking about Kunal's, it was buy on Eicher Motors and buy Petronet LNG. On that note, thank you Kunal as well as Shahina for taking time out and also giving in your, I beg your pardon, your queries for our viewers. On that note, we'll slip into a break on this edition of Buy Now. Stay tuned, more on the other side. Welcome back. You're watching Buy Now, Sell on ET Now, and let's get you a management voice, and that is Shobha. They've come out with a steady set of quarters, strong recovery in their revenues, and to talk more on their earnings, we're joined by J.C. Sharma, who is the Vice Chairman and Managing Director at Shobha. Good morning, Mr. Sharma. Thank you for joining us on ET Now. This is Cheryl on the other side. Let's start with your earnings. It's a steady set of results despite so many disruptions that we've seen in the construction activity. What has led to the resurgence, in your opinion, as far as your business, the bounce back is actually concerned in the business? Do you think it's a one-off rebound phenomena, or do you think the interest currently can sustain at these levels?
We do believe that the recovery what we have witnessed in the residential space in our sector is sustainable, and rather it can only get accelerated as the time goes by. Yes, as far as your first question is concerned, we continue to suffer because of these restrictions imposed on our movements, which has resulted into construction activities having been impacted. Of course, the laborers have started coming back, and as things stand today, we are almost at the pre-COVID level from the labor strength point of view. But at the same time, yes, there has been some disruption on the construction side. But on the demand side, on the sales side, we have seen remarkable recovery in the second quarter, because the first quarter ended with some kind of a despondency, some kind of a discomfort that how this whole year will be panning out. But gradually, as these things started getting unlocked, we have seen customers coming back, showing interest. Inquiry levels now are back to the normal levels. And it looks to us that the second half of this financial year can even be better than the same second half of the last financial year. So we are not only going to do better in the second half in new sales than the first half, we are likely to do even better in the second half than what we have achieved in the same year last half.
All right, Mr. Sharma, important point there that you expect the H2 of this year to be better than that of last year. So now let's talk about the conversion rate seen in initial interest shown and actual conversion of home buyers. How has it changed given the restrictions in the easy accessibilities? And do you think that the reduced regulatory fees have made decision making easier now?
I do believe that somewhere the reduction in the interest rates, somewhere people being forced to work from home, and somewhere where the discretionary expenditure were restricted, it did help the customers to take the call in buying the homes. And this means that the people who had shown interest, they had gone ahead with their purchase decisions, as it is borne out from our last quarter sales, which on value terms was even higher than the same quarter last year. And the third quarter has begun relatively better. which gives us the comfort that this benign interest rate environment and work from home is helping the sector reasonably well.
Right, sir. And you know, which parts of the country are seeing a faster recovery or are maybe seeing renewed interest within your micro markets? And in which markets is the impact more prolonged?
I think it's a good question. But from Shobha's perspective, we have a presence in 7 states, 10 cities, primarily in the southern part of India, as well as in Maharashtra, NCR, Gurgaon, and Ahmedabad, Gift City. Looking at the overall performance of the last 6 months, we can say that the sales numbers are secular in nature across Tier 1, Tier 2, Tier 3 cities and across all categories. You will be pleasantly surprised to know that up to 1 crore apartments, we only sold 18% of the total value, whereas 51% of the new apartment sales was within 1 to 2 crore range, and about 30% we have done new sales, about 2 crore range kind of a thing. So across all regions and across all categories is what we have been able to sell our products during last quarter, and this trend continues.
Right, sir. And could you also talk to us about the launch pipeline, especially with the labor worries? And how is the contractual business outlook looking? And then how is that business particularly performing right now?
So as far as new launches are concerned, we are in the process of launching new projects from now onwards. And you will see a good number of launches across all cities. Rather, some new cities will get added in the coming quarters. 14 million square feet of new launches have been lined up. On the contracting side, this year, our performance will be a bit impacted because of this labor issue, because of the disruption. And somewhere, the clients have also gone slow because they have not yet called in their employees back to work. So this activity probably will take another 2 to 3 quarters to normalize. But on the real estate residential side, we believe with new launches, things can only improve from here onwards.
All right, Mr. Sharma, we'll leave it at that. Thank you for joining us this morning and giving us a view of how the situation is panning out at Shobha. And that was J.C. Sharma, who is the Vice Chairman and Managing Director at Shobha. All right, let's move on. And the Modi's government's next union budget is set to focus on infra trust in a bid to accelerate the economy as well as higher healthcare spends to fight COVID-19. ET now learns that Finance Ministry may loosen its purse strings by as much as 20% for infra and 50% for healthcare to fight the aftermath of the COVID-19 pandemic. My colleague Ruchi Bhatia is here with all the exclusive details. Ruchi, what is the Finance Ministry planning?
Finance Ministry has already kick-started their budget-making exercise, and we at ET Now are given to understand the Modi government's next union budget will focus on infrastructure push as well as higher healthcare allocation in a bid to revive the Indian economy as well as the healthcare sector from the aftermath of COVID-19, the coronavirus, which is why funds will not be a big constraint for these two sectors. We're given to understand at least 15 to 20% higher allocation is likely for infrastructure sector, as well as about 50% higher allocation is likely for healthcare sector. As I said, this is coming in the aftermath of COVID-19. Of course, the healthcare expenditure and healthcare spends will be focused towards vaccine procurement, ramping up of healthcare facilities as well as wellness centers. In fact, the 15th Finance Commission had also pushed for grants to enhance per capita spending in the healthcare sector. Besides that, infrastructure will be a key focus as well. And as I said, 15 to 20% higher allocation is likely for infrastructure-related sectors. Finance Ministry is of the opinion that ramping up infrastructure will be key to generate economic activity if India wants to get back on the high growth trajectory. In fact, the commitment towards infrastructure will be for the next 2 years, keeping in mind the upcoming G20 meeting in 2022. and the 75th year of independence as well. We're given to understand the Finance Ministry has asked all infrastructure-related ministries like rail, road, housing, shipping, ports, as well as airports to open up fresh tenders to focus on infrastructure besides monitoring the capex of various CPSEs. Infrastructure thrust from all states as well as all infra-related ministries will be key in the upcoming months.
Okay, thanks for that, Ruchi. Let's also switch gears a little bit. Here's an ET Now exclusive. Sources say the mega deal talks between RIL and Saudi Aramco that had stalled due to COVID-19 are now gathering momentum. NTR, Nayantara Rai, joins us with that exclusive.
The mega deal between Reliance Industries and Saudi Aramco is gathering momentum. It's a deal that had started off, the talks had started off, remember, it was first announced by Mukesh Ambani, the chairman of Reliance Industries himself, in the last annual general meeting. In fact, we're told the data room had also opened up. You had the Saudi Aramco executives in India earlier this year in the month of January, but then because of COVID-19, the deal talks were stalled. But we at ET Now exclusively learned this mega deal is now once again gathering momentum. However, the physical inspection of the assets remains. Right now, India and Saudi Arabia have strict travel restrictions. Will that be lifted on November the 30th? But in the run-up to that, we have picked up from our sources that both sides have once again picked up the process, a mega deal which had been stalled only because of COVID-19, gathering momentum. Remember, the chairman of Reliance Industries, Mukesh Ambani, had said that Aramco would be taking a 20% stake in the oil to chemical business. There would be a $15 billion investment, $15 billion investment. And it had also been said that the oil to chemical enterprise would be valued at $75 billion. The process of restructuring this oil to chemical company has already started. It should conclude in the year 2021. Of course, we reached out to Reliance Industries and they have declined to comment. Now, there have been a lot of lessons that you learned from COVID-19, right? The future of crude, the need to increase your exposure to non-crude. And that's going to be very, very crucial for this deal as well. The conversion rate of crude to chemicals of Reliance Industries has been pegged at about 24% for the last financial year. What Reliance will want from this deal is greater access to technology and to improve its conversion rate. That's the big game now in the energy landscape, not just refining crude products, but refining them to chemicals, oil to chemicals. And that's what Saudi Aramco will bring expertise to. What does Aramco get? Where else will it find a burgeoning market like India, 500,000 barrels? And Aramco has said it dreams to be in India. It wants to be literally in every pin code selling petrol and diesel as well. So this is the latest that we're picking up. The deal, which had been stalled because of COVID-19, is gathering momentum. Both sides remain very, very committed. In fact, during the pandemic itself, you've seen fostering of deeper relations between Saudi Arabia and Reliance Industries. Look at the Geo Invit. Look at the investments that have come into the retail business as well. And so stay tuned to ET Now. This is the exclusive story that we're bringing to you at this juncture. What's also interesting is it could be at the similar valuations. You might see adjustments for debt. Remember, Reliance Industries has become stronger during the pandemic. It has raised north of $30 billion, is debt-free and cash surplus.
All right, thank you, Nayantara, for bringing us that exclusive story. Let's shift focus now to another earnings, and Vedanta reported a robust set of numbers in the quarter gone by. The PAT dipped, but as the company took deferred tax charge on dividend from Hindustan Zinc from accumulated profits. But let's listen in to the CEO of the group, that is Sunil Dugal, as he shared his outlook for the post-COVID era for the company.
We posted solid performance with improvement across all our businesses, like Hindustan Zinc achieved highest ever ore production, record quarterly silver production, and the lowest cost levels since transitioning to underground mining. In our aluminium business again, we achieved exemplary performance with cost of production down 30% from the previous year. Both our smelters in Jharsuguda and Balco are now in the first quartile of cost curve. Our Zinc International business saw 35% increase in production from previous quarter, with production ramping up in our Hamsburg operation.
Okay, it's 11:47. We're 2 minutes late in giving you the quiz question and answer. So the question was, which hotel stock in India posted the highest profit in Q2, highest EBITDA? And your options were Indian Hotels, EIH, Chalet Hotels and Lemon Tree. Now, Lemon Tree is the winner, and it's the only stock which was actually able to have positive EBITDA. Even Indian Hotels or EIH couldn't so far in H1 of this year. We have one winner today, Mukesh Kumar Agarwal. Congratulations to you, sir. Please keep participating in the BNSN quiz on a daily basis. Okay, and we at ET Now are putting the investor interest at the forefront, and many a time investors wish to invest their money into funds that are focused on a particular industry or sector. These are called sectoral funds, and on this edition of Nivesh Ke Funde, we share everything that you wanted to know about these funds. Let's listen in.
You know, Abha, the question that I'm often asked is if sectoral funds are a good investment choice.
Yes, that's something I've also asked quite often. But before we answer that, let's take a look at what actually are sectoral funds.
Well, sectoral funds are equity mutual funds which have 80% of their funds invested in a particular sector, like pharmaceuticals, technology, banking, infrastructure, and so on.
Sectoral funds are those which allow greater exposure to certain sectors which may not be accessed by other equity mutual funds.
Yes, absolutely. Those investors who are okay with exposure to one particular sector and who have a time horizon of 3 to 5 years can definitely invest in sectoral funds.
But because sectoral funds are less diversified, they actually are far riskier and more volatile than even a diversified multi-cap equity fund. Any impact on that sector will also have an impact on the portfolio of that fund altogether.
Yes, so only those investors who can handle volatility, who have a high risk appetite, and those who have done proper asset allocation for their overall portfolio should be going in for sectoral funds.
That's all in this edition of Nivesh Ke Funde on Times Network. Stay tuned for many more such nuggets of investment advice.
All right, now let's shift focus to the pharma space and let's talk about Biocon. Goldman Sachs has invested $150 million in its biologicals arm, and to talk more on this, we are joined by Kiran Mazumdar-Shaw, who is the chairperson, executive chairperson of Biocon. Good morning, Mr. Shaw. Thank you for joining us on ET Now. This is Cheryl on the other side. Can you talk about the deal with Goldman Sachs for your biological arm, and this one, the one with $150 million, seems to be a meaningful one compared to the previous investments?
Yes, as we had stated earlier, we were going to take pre-IPO investment, and this is an important investment because we are very particular that we must have a marquee investor base, when we go public. So I think Goldman Sachs absolutely brings in a very strong, endorsement and a presence of a very marquee investor.
And hi, Mrs. Shaw. Good morning. Can you talk about what the total stake sold is and the fundraise, and will the next leg of this biologics funding be via listing?
Yeah, I think if you look at the valuation, then of course the stake sale is very small. And we obviously are going to have a much bigger offering at the time of the IPO. So I think this was really, as I had mentioned earlier, was a way to basically set a benchmark to make people understand what the value of the company is and how we are going about creating value. So having investors like Goldman Sachs and Tata Capital and True North actually have, basically allowed us to explain our value creation journey much better.
About your biologics arm, it will need capex as it is going ahead. So where will the money actually be used? Will it go into R&D?
Yes, absolutely. As you know, this is a very capital intensive business. We are actually one of the very few companies in the country that is investing so heavily in biosimilars. As you know, we've decided that we must be a vertically integrated company. So from lab to market, we've made all the investments necessary in R&D, manufacturing, and of course now a commercial engine. So I think with all this, the demand for capital is going to be quite high. And given the kind of growth trajectory that we have set ourselves, I think this investment and also other investments which we raised during IPO are going to be extremely important.
Right, Mrs. Shaw. And is there more in the offering from biologics or any other pre-IPO placement before the listing?
We might be looking at a few others before the IPO is embarked on. So what I would say is at this stage we are evaluating other options as well.
Ms. Shaw, when we talk about biologics, do you continue to maintain the high growth with a sales target of $1 billion in the next 1 to 2 years?
Well, the growth is going to be very strong, but as you know, COVID has set our business back because we have it stopped us in our growth trajectory because of all the various challenges we had due to COVID. So, we will still try to get to the $1 billion target, but even if we don't quite make it there, I think we will be very close. So I think that's the aim. We would like to see how the markets recover, how the business recovers post-COVID. And based on that, obviously, we will make a judgment call as to how close we can get to that target.
All right, Ms. Shaw, we'll leave it at that. Thank you for joining us and taking us through the latest development that is coming in the biologics arm, and that is Kiran Mazumdar Shaw of Biocon. And with that, we are out of time on this edition of Buy Now, Sell Now. From me and Varun, thank you for watching.